the wholesale price inflation, the August WPI, which is out for you on the screen, 1.3% versus expectations of close to around 2% as well. Latha joins us too.
Yes, well, absolutely. Latha, over to you.
Okay, no, I just wanted to say that it's pretty close. 1.5 was the average I got, and the range was between 1.1 and 1.8. Actually, there were quite a few readings at 1.8, but the 1.1 brought the average down considerably. So anyway, it is in the ballpark. The important point is last month, the inflation number had come in at 2.24. So, okay, it's been lowered now to 1.58. But the important point is that, the inflation number, which was rising, we must remember that we are comparing this with 2023 when almost all the months were negative numbers. So one was expecting that things will start climbing a bit. The fact that the current number is lower than the previous month indicates probably the impact of Chinese disinflation. Just about everyone from steel to EVs to solar are complaining about Chinese dumping, and it's possible that that's also getting reflected. This is the manufactured products inflation. As you can see, month on month, 1.2 versus 1.58. So actually, it's lower in inflation, although the base actually should have given us a higher number. But we can still see that month on month, the manufactured products is falling. That's because perhaps the global disinflation is so severe. Food inflation has come down considerably, as you can see. That's yet another positive from the WPI number. But potatoes and onions are still expensive. And as you can see, the potato numbers are flashing for you. Overall inflation number, August WPI at 1.3, is lower than the CNBC number and lower than the July number as well. So clearly a softening of WPI. With those preliminaries, let me invite our guest, Aditi Nayar, the Chief Economist at ICRA, joins us. Aditi, this inflation WPI coming in lower than expected, what do you take away from it? Will it have a bearing on CPI at all? I mean, I know that there's very little overlap, but still will it have a bearing on pulling down CPI?
Thanks, Latha. We were also at 1.8% for this print, so it has come in a fair bit lower than what we were expecting. And one of the main reasons that we would expect, prints to remain quite soft over the next couple of months is the global commodity price situation, which has turned quite benign in the recent weeks. So while we are expecting a slight uptick in the WPI in September as compared to August, that's mostly because of the base effect related to food prices and not really because of a material change in the commodity price outlook globally. As far as the CPI is concerned, I think we need to see many of a clear trend of disinflation in commodity prices for that to really start to seep through to the non-food goods part of the CPI. The services part of the CPI, of course, carries on in its own trajectory, and the stickiness over there is very hard for commodity prices to really break. And food prices, while the immediate term, we think that there is going to be a turn in the base effect, which will lead to higher prints for the food inflation. But overall, if we look at, the rainfall, the Kharif sowing, and particularly the reservoir situation, it's generally setting up well for a better second half of the year.
Okay, well, at the moment, cereals inflation is still high. I checked the WPI numbers coming in at, I think, 8.5 or something. Marginally lower than July number, but still cereals perhaps and potatoes, as you can see, are some of the products which are still stubbornly high. Aditi, the other factor that WPI will impact is the GDP number. If WPI is going to remain more subdued than many people told us, I mean, as you said, your own forecast was 1.8, it's come in at 1.3. If it's going to undershoot, then will we have a nominal GDP shortfall by the time we reach the end of the year? I think the budget is working with what, 10.8?
But at the same time, lower commodity prices will push up margins for the manufacturing sector, and that's going to push up the real GVA growth. So I think part of this will end up getting counterbalanced. We really have to wait and see whether one is going to outweigh the other. But certainly, if commodity prices remain benign, then possibly we'll be looking at a slightly higher GVA and GDP growth number for the current quarter. And in any case, in the second half of the year, we were expecting a back-ended uptake, particularly from, a pickup in government capital spending after the monsoons are over.
Okay, well, I just wanted to tell you, edible oils inflation index is up 0.7% month on month. We are going to see a higher rise in this item because of the higher import duty that's just come in. That's clearly for some farm relief that this has been introduced. But otherwise, there are no surprises. Food inflation is considerably lower. It's only vegetables inflation is down 12% month on month. Cereals is the one that one should worry about. It has not been impacted enough by the bountiful monsoon we have had so far, but perhaps it will be back-ended unless there is some La Nina monsoon which destroys some crops. We should be well on our way to a probably more benign cereals inflation. Edible oils inflation and telecom will be two things which will be priced up and bring up the headline inflation. Well, that's it really from the WPI number. Aditi, thank you very much for joining us. The key takeaway, WPI is lower than what analysts have been expecting at 1.3%. It's also lower than July. It won't have much of a bearing on the CPI. The RBI looks only at CPI, and his latest interview to CNBC also clearly indicated that he has not reduced his hawkishness on food prices. And as he correctly worries, cereals and potatoes are still higher. So from these numbers, although it's come in lower than expected, we can't have a read-through to what RBI will do in the October policy. We can't say from this number it's lower than expected, therefore RBI can be more benign. These conclusions cannot be coming through. So it's of limited use at this point in time. Just one final point. I don't think the bond market even needs the CPI. It's already falling because of US yields.
All right, Latha. Thanks very much for that, as well as Aditi to take us through the WPI data for the month of August, which is coming at around 1.5% versus 2% on the month-on-month basis. Food inflation has softened. We'll wait by for the core inflation data as well. But nonetheless, we need to take a short break with the news that the markets are extremely quiet in today's trading session. So the Nifty is just about higher by around 31 odd points. Maybe the street is in a little bit of a holiday mode for these 3 days of the week. We'll take a short break. We'll be talking to JBM Auto as they secured $100 million in terms of strategic funding. Up next, stay tuned.